Hey everyone, Charting Man Dan from ChartGuys.com. Behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on Twitter GPRO X and CHK daily weekly time frame. So the Twitter bears are keeping control. We closed near the low of the day on high volume yesterday, lower high, lower low today, loss of the 200-day moving average. So as soon as we broke 1783, that is a bear signal, and obviously we're seeing the follow through to the downside now with a multiple percent pullback from that level, about 3%. So from here we have support of 1730, the low that we've seen. Then we're looking down at 1697 and a gap at 1679. We'll see how in control the bears stay here, but this is all occurring with the market still strong. So I personally thought that the bulls would be able to hold up better after seeing the first 3 weeks of consolidation and seeing how healthy it looked. But after the failed continuation attempt, another leg to the downside here, and the big red candlestick, obviously, giving the bears control. So in terms of turning it around, the bulls are going to have to make a bounce attempt. They will likely form a lower high. They'll have to form a higher low and then a higher high to try and reverse this trend, because as of right now, obviously the bears are in control. GPRO, yet another rejection from the 50-day moving average resistance. Consistent resistance, 3 days in a row. Close at the low of the day. Watching for a break of 838, 828, and then on down to 802. So as long as that 50-day moving average is resistance, the bulls aren't even going to test the weekly middle Bollinger Band resistance, which is at 873. And we came close at the high of this week, but no follow-through at this point. Depending on how the next 2 days go, we'll have to see what this candlestick looks like. A bullish reversal candlestick last week. No follow-through and confirmation this week with an upper wick of profit taking. So if we can't get over the 50-day, the bears do still remain in control. Looks like our lower high may be set here at 865. Depends on the market reaction. We do see some correlation with the market, and SPY is still strong. We could see a new all-time high this week depending on how the reaction to the testimony tomorrow goes. So keeping that in mind, but obviously still very bearish as there's no sign of the bulls gaining any traction on the weekly time frame. X, bulls saved the day. We made a bear break in terms of the price level, just below $20, but there was news Trump was talking about his infrastructure plan, and the X bulls ran with it. So we did stay within this channel, although we did break below that level. Obviously, bulls are buying the dip, and I'm still looking at this channel. Essentially, at this point, I'm looking at $20 psychological support, and I've got resistance at 2108, 2129, 2158. Channel is small here and tight, and we need to see the upper Bollinger Band ascend to the upside to create some room for the bulls to see follow through. The volume was there for the bulls today. Have to see follow through and confirmation and continuation tomorrow with another green day. Weekly time frame inside bar is likely to form unless we have a strong end of the week. And we're just trying to hold the 100-week moving average and get over the exponential. It's still a potential bear flag, and that will remain the case on this chart until we can see a break of this lower high pattern and a break of these exponential resistances with the bulls attempting to show up. So keep in mind, still a potential bear flag. We need to break the mid-21 resistances. CHK, nice follow through for the bears. Had that clear bear break, and it was clear. So support was down at $5. Once we broke $5, 488 was next. $5 was the signal for me. As soon as we broke $5, that was a bear signal. We did have 488 as a little double low. As soon as that level broke, we saw a very clear bear break, and now we saw the inability to confirm the bullish reversal candlestick from yesterday and continuation with a lower low. So now down to 474. Look at the weekly time frame. It is a very clear break of a horizontal base of support at $5 that held 5 tests, and we are now below that level. So we're looking down here. 477 was support. We broke below that level today. Now we're looking down at 430. There's a lot of downside exposure here because of the break of that support. So natural gas and oil not helping, and a dump in oil with the inventory report certainly not helping. And watching the 100-week resistance, which rejected the price, that kept the bears in control. And a really nice bear play. Added this one because of the potential to break this pattern. Added this to the bear list. and obviously following through. So we'll see how much downside we get here, but this is very clearly now a bear on this weekly time frame as long as the 100-week moving average is resistance, and we're currently 20% below that level. So that shows that the bulls have tons of work to do to try and turn this thing around. So I appreciate you watching. Lots of bears out there, and GoPro, scout that 50-day moving average resistance. A pullback down towards $8 gives some nice short-term gains if that is where we are going to reject. Thanks again. See you tomorrow.